Hey, it's Richard with Matthews Wealth Management covering the March 2024 asset class performance market update here. So not much to report. Everything's great. Everything is awesome. Whatever. Good song, by the way. So NASDAQ, we're up 10.15% year to date. This is as of today, and it's obviously in April. So not much to really report there. S&P's up 9.54, conspicuously close to NASDAQ. There was quite a bit of a pullback on the Magnificent Seven, but whatever. Let's jump into the moderate portfolio. If you're in the Dow Jones Moderate Index, 2.86% year to date. That's not so good. You would expect that if the market's up 10, you want a 50-50 portfolio to be up 7-ish, 5 to 7-ish, something like that, right? So if they're only up the 2.86, that should give you quite the hint. Looking through the equities, right, the stocks, we have 5, 3, and there we go. We had a little bit of a pullback in the tech sector on the Magnificent Seven, but for the year, up 8.8, 12, and 9.6. That's pretty nice, actually. The best performing asset class would be large cap blend. Mid caps, we had a 6.42, so looks like the value side was definitely the winner here, and it should be, honestly. Although, if there's concern about bubbles and so forth, I guess money would flow over towards the value side of equities, but if there's concern, normally we get a flood out of all equities. So anyway, it's kind of sensical. We got the 6.41, 4.7. It looks, we've got core doing really well, and all of ours are heavier up in this area and lighter down in this area. But let's jump into internationals. Good month for internationals, 3.4, which brings us up to about 6. And all of our gains were effectively in March for emerging markets. This is just a lot of green, right? Everything is up except for that little Magnificent Seven blip. And then we get to the bonds, right? But it was a good month in March. Everything went up. We're still behind on tips, still behind on long terms, but you can see that was quite the advance on long terms. And there's no rate cut in sight, right? We're talking about cutting back to only 2 rate cuts this year. And as of today, that's even more questionable. But intermediates are still down. And then we basically got all of our return on shorts in the month of March. Getting to commodities, oil's taking off. It looks like this whole Iran, Israel, Ukraine, just crazy world is escalating. We're up 18% on oil for the year, so quite a big jump in March. Gold, wow, where'd that come from? As a matter of fact, today it's $23.43, so it's still cheap. Just so you know, if you have extra money out there and want to buy something, now's a good time. But real estate up 2, right? So they're still negative on the year, but that's a big advance, right? They were down 2.7 something, and now to go up 2 in 1 month is a big deal. Still no rate cuts, so a little bit strange. Bitcoin up 61% on the year, with another 14% coming in March. When gold and Bitcoin's going up, that should tell you something about the dollar. All right, year-to-date numbers. This is year-to-date as of the end of March, right? The other ones were live. This one is as of the end of March. So 10-10 or 11-11, right? The NASDAQ S&P conspicuously the same. The moderate's 3.74. Quite a big jump in the last 9 days, I guess, versus that previous slide with the black graph there. And we're up 4.7, whatever. So yeah, if you're not all in stocks, you're not making a ton of money, but I'll take 4% per quarter. That's good stuff, I guess, in the grand scheme of things. Hoping that we don't have to show why we don't have full exposure to stocks. But yeah, it's kind of a boring month, right? Like everything is up, everything is awesome, whatever. We'll see what that BTFP result looks like in a few weeks. Probably not till April or May, but regardless, see you next time.